5 financial markets from the most risky to the least risky. Now, number one is crypto. Crypto is the most risky market in the financial market. A single tweet can send crypto crashing or rising. A single tweet from a big tech guru or a big financial institution or a top personality figure can just send Bitcoin rising or crashing within just a day. And there are basically two ways you can make money in Bitcoin or in crypto. You can make money from long-term investing or by short-term trading. Now, long-term investing is when you buy the coin and then you just leave it. Then over the months or over the years, it increases in value. And also short-term way you can make money is by trading it. You can either day trade it by selling or buying the coin, although very risky. So one thing about crypto is that when you buy crypto, it's not fixed or it's not stagnant. It's always fluctuating depending on demand and supply of the coin. Alright, so the second on the list is forex trading. Now, in forex trading, what are you doing in forex trading? You are buying and selling currencies digitally, and those currencies are real currencies that are also backed by the central bank of that country also. And also, the forex market is the largest financial market in the world with over $7 trillion traded globally. Forex is still risky, but with the right education and with good risk management, you can actually make a meaning of it. Now, the third on the list is commodity markets. Yeah, commodity markets is usually affected by things like war, news, global uncertainty, geopolitics, and political reasons. Now, let's assume if there is just a rumor or threat of war, it can send gold rising. Gold is a commodity. It can also send oil. Oil is also a commodity. It can send oil rising. Gold, oil, silver, all of that, they are commodity. Now, stock trading is actually the fourth on the list, and stock trading is backed by real companies. Mind you, as we are going down the list, the less risky they become. The performance of a stock is actually dependent on the company performance, the supply and demand of that stock. And one thing about stock also, you can make money from stock by long-term investing or by short-term trading. You can just buy the stock down, and then over the months, over the years, it can actually increase in value. And then by short-term trading, you can decide to just short or long Nasdaq or S&P 500. Yeah, they are all stock. For instance, what could make a stock crash could be because of maybe if there is a CEO scandal. Let's assume the CEO of a particular stock is involved in a shady deal that involves him not having integrity. Now, investors are actually going to be scared or might be scared and sell off their stock. And once investors start selling stocks, it also reduces the value of a stock because nobody wants to do business with someone that lacks integrity. Yeah, because that could actually mean that their money is not safe. And one thing about stock is that some stock pay dividend. For instance, Coca-Cola, they pay dividends to all their stockholders, people that buy their stock. They pay dividends to them every three months. So the last on my list is actually the bond market. So the bond market is the less risky financial market. Now, what actually is bond? Bond is when you lend money to governments or you lend money to a large financial institutions, and then at the end of the year, they pay you interest for the money you lent them. You can lend them a huge amount of money, and then they can pay you like 24% interest at the end of the year. The return on investment for bond is small, but your money is actually very, very safe. So whichever of the financial market you want to go to just depend on your risk appetite and your risk tolerance. But just know one thing, crypto is not for poor people, because crypto can just make you rich and poor overnight. So if that's all you have, you don't even go into crypto. It's not for poor people at all.